I'll also look at the currency market as we start a new week. Now, first off, some oil marketing companies are calling for the removal of the fuel price floor policy, arguing it is preventing further reductions in fuel prices at the pumps. More in this report.
The National Petroleum Authority in February 2025 rolled out this policy that will ensure that no oil marketing company sells below a certain price. The move was part of measures to prevent what they call price undercutting in the industry. But some players argue that the current development in the market warrants its removal. Philip Tieku is the managing director of Star Oil and is one of those players who has been pushing for this policy to be removed.
Price floor, I think, denies the consumer of market opportunities. For example, we've had a period when the CD suddenly dropped from 12 point something to about 10.5. Because of a price floor, I can't sell my fuel below 12.
There has been several industry research and data that has shown that lower prices boost volume sales of these oil marketing companies. But also for the consumers, it reduces the cost of living and impacts on other sectors of the economy, like prices of goods and services.
Meanwhile, the National Petroleum Authority is rejecting proposals to remove the price floor policy so that various players can determine their values without restrictions. It insists current developments in the market still warrant this policy to protect consumers. Listen to Abbas Ibrahim Tasunti, who is head of economic regulation and planning at the National Petroleum Authority.
We've heard some of these comments, but it's important we understand the relevance of the price floor and why it was introduced in the first place. So if you recall, 2 years ago, the discussion about unfair price undercutting and unfair market practices came up. And this was because we had done an assessment of the price regulation policy since it was implemented in 2015. And one of the major concerns that came up from both the oil marketing companies and the oil switching companies at the time was price undercuts. We must understand that in as much as the market is regulated, the regulator MPA is there to protect both the consumer and the petroleum service provider, which is the oil marketing company in this case. If we don't have fair competition on the market and the market collapses, we are going to struggle as an economy. And therefore, the regulator's job is to ensure that there's what we call full cost recovery of investments. So there's a policy, there's a pricing formula that is used by all the marketing companies. And in this formula, there are certain components that the oil marketing companies control. And there are certain components they have no control over. So if you look at our formula, you realize that there's the FOB price at world market price, which we have a way to determine that. There are other costs that are fixed and apply to all players. The new regulation actually allows the oil marketing companies to determine their own margins, and that is where the competition is.
Well, let's discuss this further. Joining me on Zoom, chartered energy economist Ifeanyi Owusu-Agyemang to share his perspective to this ongoing debate over the price floor policy. Good to have you on the marketplace. From an economic standpoint, do current market conditions justify maintaining the fuel price floor, or is there a case for its removal now?
Okay, thank you very much for this opportunity once again. If we are going to, before we talk about the conditions, whether it's right for it, we need to actually understand the perspective and the reason why some of these price floors are usually given. You know, the price floor has actually been set by the National Petroleum Authority to prevent the market from selling below a particular cost. And the main aim is to protect some businesses in the sector, because normally when there's higher competition, it doesn't allow smaller companies to compete with them due to the fact that they do not have so much funding compared to the established companies. So the price floor is actually there to protect some of these smaller companies and also to ensure industry stability, due to the fact that the market we have in the country heavily relies on foreign exchange. And with the volatility in the foreign market is definitely going to impact on the market. And so governments have to bring a price floor to ensure that there's some kind of stability. Considering the current conditions where fuel prices worldwide has gone down, yes, definitely prices are going to be seen coming down. And that is the reason why we've seen most of these OMCs having and coming up to the National Petroleum Authority to bring this cap or remove this price floor from there so that prices can further reduce. But then if you consider the views of these OMCs, yeah, they are right that prices should reduce further for consumers to enjoy. But then if we are going to reduce or remove this price floor, then we should be looking at the long-term impact that is going to have on the market. Are we willing to, sacrifice the for consumers to have like a lower prices of fuel, or we want the markets of the sector to be stable? Then in my opinion, I think this price floor should be maintained, considering the fact that the market depends solely or highly on the foreign exchange, and also to ensure that there's proper competition and the protection of other smaller companies in the other OMCs. So I think government should continue to maintain the price floor, even though generally the market prices have reduced, but then government should maintain it to ensure that the industry is safe for other players to also join, and to ensure that the economy is still running. Because definitely if we remove this cap, then in the future we risk having that industry breaking down.
Yeah, and the National Petroleum Authority says it's to protect industry stability. The OMCs are also saying, or some of the OMCs saying, that it is hurting consumers. Who actually bears the greater cost of keeping the price floor?
Well, as it stands now, it's the consumers who are going to be bearing the cost of it, because definitely it's going to push up. If prices can reduce further, then definitely it means they are going to be paying for more. But then if we are not going to keep the price floor and the stability of the market crashes, then consumers are going to bear the cost in the future. So it's just about the short-term and the long-term analysis, because if we are removing the costs from there now, then it means in the future people are going to pay. But as it stands now, it's just the consumers. They just have to sacrifice certain things so that we are able to, protect the market for it.
Yeah, I know you are for keeping the price floor, but help us with the suggestion that removing it could lead to lower fuel prices, and to what extent is it going to be short-lived or sustained, do you think?
As it stands now, we cannot really predict whether we will be able to, it's going to be short-lived or it's going to take a while for them prices to reduce. What we can do actually is where we are going to analyze the market and see how future prices are going to be. So in this case, the National Petroleum Authority and the OMCs can actually have discussions and to kind of bring certain relaxations when it comes to the price floor. And it's not going to be definite for all OMCs to follow it. So they can make analysis of the market to see, let's say this month and the following month, we foresee that the prices in the markets are further going to reduce. In that aspect, or in that case, then the government can say, instead of a 3% price floor cap, because we are expecting prices to increase or prices to reduce further in the following 2 months, then instead of a 3% cap, we should actually reduce it to, let's say, a 1%, so that consumers can enjoy more of the reduction on the global stages. I think if government is going to be very flexible in that case, we would be able to protect the industry and also protect consumers' interests, because at the end of the day, there's some kind of flexibility. But scrapping it all is not going to be something that is going to be sustainable. And I believe government is doing the right thing for the market to be stable for everybody.
And again, you think the MPA's concerns are valid about this potentially destabilizing the petroleum and financial sectors?
Yeah, I think it's very valid, because normally most of these OMCs operate, they take loans to work and do their businesses. So MPA's argument is actually good because in the long term, it might even lead to higher bank non-performing loans because of the fact that if there's no protection or anything like that, smaller companies will not be able to compete very well with some of these guys, these OMCs who are doing very well. And this might even lead to fuel shortages. It might cause unpaid suppliers and all those things. So MPA is actually right and he's valid because the market solely depends on the exchange rates and also the fact that most of these OMCs depend on bank loans and all those things. And so if there is this price cap, government is able to protect the interests of everybody, the market is stable, it keeps running, we do not get any high bank non-performing loans, there's always going to be fuel production in the country and everybody is going to benefit from it.
Is finding a middle ground feasible, let's say temporarily suspending the price floor policy so that there's a bit of relief for consumers, there's a bit of competition and perhaps market stability?
Yeah, there can be a middle ground. Like I said earlier, governments can actually decide not to be very, very strict when it comes to the price floor setting. So they can actually have like a range, a band range where we are going to say in this period, if this is what we are seeing on the market, then in that case, we should reduce or take off the price floor temporarily so that prices can reduce drastically for people to enjoy the lower prices on the market. Or we can actually be collecting data from the market, make predictions to know that in the future we are seeing that prices are likely to reduce. And so governments can, in that expectation, reduce or take off the cap so that it can help consumers to enjoy more reduction of fuel prices. Also, we can actually look at when the CD is gaining or maybe is weakening, then in that aspect, we can actually say that, the CD has now gained, and so we should just take off the price cap, or even reduce the price cap from the percentage it is at this point to, let's say 1%, 2%, depending on what is there now. So it all depends on the market, the OMCs and the MPA. There can be a middle ground for them to do it, for everybody to benefit. But taking it off is something that's not going to help us in the long run.
Well, thanks for joining us once again. A chartered energy economist, Ifeanyi Osuajiman. Thank you so much for your perspective on this matter. You're watching The Marketplace here on Joy News. We are taking a short break. We have your financial markets update coming up. Welcome back to The Marketplace. Investor interest in government treasuries continue to surge as the government exceeded its target by 41%. The auction results revealed that the total bids accepted were more than 10 billion cedis higher than the targeted amount. Head of Trading at Republic Securities, Patrick Edemagama, joins me on Zoom to discuss. So why are investors putting so much money in the 364-day bills?
Okay, good afternoon, Dara and viewers. Okay, so what we are saying is that interest is still mounting because confidence is increasing in the money market. We've seen rates going up marginally, but that might not be the main reason. If you compare these rates to the rates that closed in the fourth quarter of 2025, we'll see that these rates are actually much better. We are seeing the 91-day clear at 11.19%. Going up marginally by 2 basis points. We've seen the 182-day closing at 12.64%, going also by 3 basis points up. And then the big margin was felt in the 364-day that rose by 7 basis points to close at 12.98%. Again, as you said, we've seen government accepting more than it actually required, just because it's also preparing for the maturing bonds. The DDP bonds will be paying coupons in February, so they need to collect enough money towards that.
And what does it mean that the government received much more money than it planned?
Well, basically, if you have a target of 7.1 billion and then investors threw 10 billion at you, and you accepted or rejecting just about 30 million cedis, it should tell you that you are either preparing for something ahead or you need this money in the coming days. And we know in February there will be coupon payments for the DDP bond, so it's just right for them to accept as much as they can now.
Well, with interest rates rising, will borrowing costs keep going up, or do we expect them to come down soon?
Well, the rise we are seeing in the interest rate is not so big to be able to push the borrowing cost up. We know the policy rate trend is downwards, so we expect that cost to be downwards, not benchmark too much on the short-term yields we are seeing on the market.
All right, let's switch to the stock market. Last week we saw a bullish trend. What's driving that? Talk to us about that.
All right, so for last week on the stock market, we saw trades in about 27 equities with 9 price changes. MTN was the sole laggard last week, dropping by a peswa. We are seeing the market closing at 0.47% and the financial stock index closing at 0.87%. Compare that to last year, you see that the drivers of these week's gains came from about 8 equities. So if you look at that, you can see that interest in the market is picking up, and it's not just on one equity, but it's across board. We can still call it a bullish trend because of what is happening. For this week, we expect activity to increase in MTN, Carbank, and New Gold. However, stocks like Benso Oil Palm, Access Bank, Republic Bank may see some peswa gains based on the buying pressures on the market. On the flip side, stocks like Total, you've seen a lot of selling pressures. We expect them to lose a peswa or two.
Yeah, my final question has to do with MTN. How significant is the decline we saw last week? And some analysts believe that we are going to see a further decline this week.
Well, we are seeing a lot of activity in MTN. As we are speaking, MTN traded about 12.4 million shares this morning. It means there is interest, and also there's someone also selling. And we know from now till, let's say, May, MTN will likely declare dividend. We saw the interim dividend rising by 30%. So it should tell you that the final dividend for this year will also be much more than the 30%. So interest is supposed to pick up. So as we are seeing the price volatility in MTN, we should know that interest is picking up. People are buying or people are coming in, whilst others too are selling to actually crystallize some gains they've made last year.
All right. Thank you very much for the update. Patrick Edemagama, Head of Trading Republic Securities. At least we know where to put our money this week. Thank you so much. Well, as emerging technologies continue to reshape entrepreneurship across the continent, Studentpreneur Africa Network has taken a bold step to empower young innovators with the launch of the Studentpreneur Innovation Festival 2026. Here's more in this report.
Studentpreneur Africa Network has officially launched Studentpreneur Innovation Festival 2026 under the theme Freedom to Create, Emerging Technologies and the Rise of the African Studentpreneur. The event brought together policymakers, development partners and students, creating an enabling platform for mentorship, innovation and skills development through education and empowerment. Founder of Studentpreneur Africa Network, Claudia Chum, underscored the importance of deliberately supporting young people to drive national development through innovation and entrepreneurship.
Studentpreneur Africa Innovation Festival is simply bringing together young people, especially students, to showcase their innovation skills, talents to the nation, what they can offer to the nation. We chose it much for independence mindset, letting them understand what it means and then how they can give back to their country. We're looking at it becoming eventually a national impact day for the youth, that they will not just go waste their lives or go and have fun, go to the beach and then just go and drown, but they are using that day to tell the government that after all that you put in us, we have something to offer, and we're using this day to give back to our nation.
Director for Research and Innovation at the National Entrepreneurship and Innovation Program, Caspar Sunday Kampoli, called for targeted policy support for startups, particularly tax breaks and waivers. According to him, such incentives would strengthen the startup ecosystem and encourage more young people to venture into entrepreneurship.
The current government has realigned the VAT formula, whereby if your turnover is not up to 750,000, you have to charge VAT. So it means businesses turnover that is around 300,000, 400,000, they don't need to charge VAT. I think it's a good step that to support startups. So we need more of this for startups, that we think that they are on a good path, they are doing well. So we should give them this space for them to grow organically before we go to them to pay tax. So what startups in their early stages need is to exempt them from taxes. They should give them tax waivers. They should support them if finances are there, like the Jumoro program seeks to do, where they are training at least 10,000 young people every year and identifying some of them and giving them grants. That we need more of that.
The main Studentpreneur Innovation Festival 2026 is scheduled to take place on 6th March 2026.
And that's the Marketplace. Thanks for watching, everyone. There is more news on our website, myjoyonline.com/business. CD's record performance in 2025 is a shared national gain, according to the first Deputy Governor of the Central Bank. Also, MPA pushes back on proposals to scrap fuel price floor policy. We've been talking about it so much today. You can read more about it on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We leave you with the latest international headlines.